Good morning. I do want to reinforce we've had a very strong fourth quarter, as you mentioned. So revenue's up 1%, record revenue for the year. We've been gaining market share, 6 consecutive quarters where we've been ahead of our key competitors, 800 basis points up. And through the P&L, we've seen productivity up 3%, costs down 8%, and that's driven an EBITA margin which is up 60 basis points to 4.3%. Now, I mention that because I think it's quite important when you're thinking about what we're seeing right now. So yes, volumes are down marginally in January. It's quite early in the year, but the key point is we're seeing different conditions around the world. There are parts of the business that are growing very nicely, and we operate in fragmented markets. And that means we can continue to build on the momentum and gain share.
Indeed, I think many of us have seen just how uneven the labour market has been in recent years. Still very hot sectors, others where we've seen some weakening take place. Just what does this look like in the business in terms of those that are still performing well? Are they the margin areas, or are we seeing a little bit of a fade in that area too?
Well, if I step back and look across the business, there are some areas of real strength. So if I think about Asia Pacific continues to be strong for us, Latin America has been strong. The Eurozone is quite mixed. There are territories like France where the market is down, but there are other territories like Southern Europe where we're doing very well. And even in economies which are generally accepted to be under pressure, like Germany, we've actually posted really good growth. And it's because the business is spread across a number of sectors, a number of territories, and the markets are fragmented. Our focus is on really building on that and taking share.
Coram, nice to see you, sir. Is there any sign of a landing anywhere where your jurisdictions send your business? Everyone's talking about, recession, soft landing, maybe no landing. I just wonder what your thoughts were.
I think it's really difficult to predict where this is going. There's been uncertainty in 2023. I think that continues into 2024. We have a number of different scenarios that we're looking at. But, our focus is on the operations of the business and taking advantage of where we can find the growth and capitalizing on it by pricing effectively and gaining share. But at this stage, Steve, we're focused on managing with agility. I can't really predict where it's going to go in the short term.
Fair enough. Look, I think, unless I'm wrong, you're one of the rare beasts of Europe. Of course you are. But I can't see a buyback in there. You're one of the few companies that doesn't look like it's got one. Have I missed something?
No, you haven't missed anything. We've declared a dividend of 250. That's in line with prior year, and it's very much based on the strength of the operational performance that we've delivered in 2023. But in balance sheet terms, our focus is on deleveraging. We're very focused on driving operational cash flow. We've got a plan to improve free cash flow, and it's all about bringing us down to the net debt target of 1.5 times.
Coram, can you